Welcome to The Explainer, where we break down complex reports into something you can actually use. Today, we're diving deep in cracking the code on a technical analysis of Cigna Corporation.
All right, let's get into it. Cigna's stock has been, well, a complete roller coaster lately. But here's the thing. Hidden inside all those charts and numbers are clues. Clues about where it's headed next. And our job, it's to piece them all together, just like detectives.
Okay, first things first, let's open up the case file. So over the last 3 months, Cigna started out high. Then bam, it takes this massive nosedive in August. But wait, it doesn't end there. It stages this incredible comeback, ending up right back where it began. Talk about some serious whiplash, right?
So, to figure out where this thing is really going, we've got to do what every good detective does: follow the money. And in the stock market, following the money means looking at trading volume. This is our first and maybe our most important clue.
And here it is, our first major piece of evidence. Look at this, a huge spike in volume right at the rock bottom of that August drop. We're talking 5.4 million shares changing hands. The analyst has a great name for this: seller exhaustion. Basically, it means the sellers just ran out of gas. They had nothing left to sell.
This leads us to a really cool tool for tracking that money flow. It's called on-balance volume, or OBV for short. Now, just think of it like this. It's a running score, a scoreboard for the buyers versus the sellers. When the OBV is going up, it's a big hint that more money is secretly flowing in than out, even if the stock price itself hasn't caught on yet.
And this, my friends, is absolutely crucial. Because get this, Cigna's OBV is high. That number tells us that while the price was going nuts, swinging all over the place, smart money, buyers, were quietly scooping up shares in the background. That is a seriously powerful hidden clue.
Okay, so we've followed the money. Now let's see where the investigation leads next by calling in our expert witnesses. I'm talking about the technical indicators. These are basically the forensic tools of the stock market, mathematical gadgets that help us figure out what the market is thinking.
But here's where the plot thickens. This is not an open and shut case, not by a long shot. Our so-called expert witnesses, well, they can't seem to agree on anything. Some are screaming buy, others are yelling sell. It's creating a really complex, messy puzzle for us to solve.
So first on the stand is the Relative Strength Index, the RSI. The easiest way to think about this one is like a speedometer for the stock's momentum. If it's redlining, we say the stock is overbought and it might need to pull over for a bit. If it's crawling, it's oversold and might be ready to accelerate.
And for Cigna, its RSI is clocking in at 66.72. So what does that mean? Well, it's kind of in the middle of the road. It's got some gas for sure, but it's not flooring it into that overbought danger zone just yet.
All right, next up, we've got the MACD. Now this is a big one of the most popular tools in the entire toolbox. Its whole job is to spot when a trend is about to change direction or get stronger. It's like an early warning system for momentum shifts.
And check this out. This is a major clue for the bulls. The MACD just recently gave what's called a buy crossover. This is a classic textbook signal that positive momentum is starting to build, and the buyers, the bulls, might just be getting ready to take charge.
But just when you think you've got it figured out, the testimony gets all jumbled up again. Yeah, some of our other indicators are totally on board with the MACD. They see a budding bullish drive. But then you've got this other group screaming bloody murder, issuing sell alerts because they think the stock has gone up too far too fast. So yeah, our experts are completely split on momentum.
Okay, so we've got total chaos on the momentum front. But let's ask a different question. Is there even a strong trend here to begin with? To get an answer, we turn to the ADX. Think of the ADX as the judge in our courtroom. It doesn't care which side is right or wrong. It just tells us how strong the case is. Is there a powerful trend, or is it just a lot of noise?
And the judge's verdict? A measly 17.93. That's low, really low. It's telling us that the overall trend is weak. It's choppy. It's erratic. There's just no real conviction, no powerful force pushing this stock one way or the other right now.
So our investigation now takes us right to the front lines, the key price levels where the real battles are being fought. These are the trenches, the battlegrounds that we call support and resistance.
So the report lays out the map of this battlefield for us. Down below, we've got a really solid defensive line, a support floor right around $300. That's where buyers have dug in before. But if you look up, the bulls have to charge uphill.
Their first major obstacle is at 319, and if they get past that, there's an even bigger fortress waiting for them near 327. Okay, we've looked at the evidence, we've heard from our conflicting witnesses, now it's time to put all these pieces together. Based on everything we've seen, this report lays out 3 totally different ways this story could end. 3 possible scenarios for what happens next.
And the first 2 scenarios are like a classic boxing match. In this corner, we have the bullish thrust. The positive signals win the day, the price smashes right through that 319 resistance and keeps climbing. But in the other corner, you've got the bearish turn. Those warning signs prove to be right, the stock gets knocked out at resistance and tumbles all the way back down to that $300 floor.
And then there's door number 3. And honestly, given how weak that ADX reading was, this might be the most likely outcome. It's the neutral drift. The stock just gets stuck. It wanders sideways, going nowhere fast, because neither the buyers nor the sellers have enough oomph to make a real move. It's like the whole market is just holding its breath.
So there you have it, all the evidence, all the possible futures. Let's finally get to the bottom line. What's the analyst's final call in all this?
After you weigh that bullish MACD signal against all those bearish warnings, and then you throw in that super weak trend, what are you supposed to do if you're watching Cigna right now? What's the big takeaway? Well, here it is, the final tally. And wow, it is basically a split decision. You've got 5 signals flashing buy, 4 flashing sell, and 2 just shrugging their shoulders. So what does that lead to? The analyst calls it a low confidence hold. It's a hung jury. There's just not enough solid evidence to convict or acquit. No strong case to be made for going long or short.
So what does all this mean for you? The bottom line is patience. Strategic patience. The analyst is basically saying, hold your horses, wait for the market to make a big, loud move on high volume before you jump in. If you're already in the trade, the advice is to set your safety net, your stop loss, right around that $300 support level just in case things go south. Ultimately, we're left with a stock standing at a crossroads, a mystery where the next chapter could begin at any moment.